Hi everyone, it's Sam. Okay, let's get started on today. Not feeling as energetic today. It is 5 o'clock almost in the evening here on June 18th, 2024. Let's see. Did a lot of mental stuff today, lots of thinking hard. And so my brain's kind of tired. And as you saw by the thumbnail, I guess, it was a not very good day as far as the day trading goes. 2.3% down. 2.3% down, $25 down. Back to 169. 1,069. Ha ha, 69 joke. Joke's on me. Lost $25. We're gonna have to board it up. Shut her down. You know, beat ourselves up over it. No, I'm just kidding. I don't actually think any of that. I'm not upset about this number. I'm not upset about this number. I kept my cool today. I think I kept my emotions intact. Like the whole time I felt like I was in control, so it wasn't that bad. It's not like I lost a bunch of money because I just like flew off the handle or whatever. So that's fine. I'll explain it. We're not getting edits because editor Jared has some life stuff going on. So I'm just uploading these videos. I uploaded one this morning for Monday's recap with no edits, and I'm going to upload this one with no edits. But today I know it's not going to have any edits, and so I don't think the 10-minute rule for Jared, the editor, applies. Which this morning when I was thinking about going over this recap here, I thought I would do a lot. That I would just fly out. What? Take forever. I thought I would rant for a while on this, and I had a lot of good ideas and stuff, but now we're at the end of the day, and it's just, you know, tired a little bit, but that's fine. That's fine. So the reason today was rough is it just the strategy I'm using here is didn't wasn't much working for it today. I definitely could have made money today, but tomorrow is Juneteenth holiday, so it's a short week. Tomorrow's a holiday. There's literally no news catalyst going on. No big earnings, no big financial reports. I think it's just kind of slow, and the volume maybe is relatively low, or my thoughts. And this morning when I was trading this in here, because the biggest one was up 118%, they're just kind of flat. They're kind of choppy and kind of flat. Came from 60 to a dollar, couldn't break out from a dollar, and this was the top gainer for the day. Next one down, I haven't really looked at these, but like, yeah, it made it jump up and it was just flat from there. Just flat. I don't even know what these are. That one was a weird chart. This one did something weird. So there must have been some news there. But down and then flat. So it makes a move and then it just does not much of anything. So, it just wasn't a good day for the strategy. And I knew that. I knew that at about -$7. So I made $2 and then I lost some money. I went down to like -5, I think, which is actually typically how the trading goes. Like I break the ice with a small one, and then my next one, I try to get in, and it just doesn't work out for me for whatever reason. And then, I just kind of you spend more time with the stock, and you get a sense of how it's going that day, and you get a little bit used to it, I guess. I don't know. And then I can go back positive. So typically the day goes a little bit green, kind of negative, and then I get up green enough that I'm close enough to my goal, or I've hit my goal, and I call it a day. But anyway, I was knowledgeable of what was going on in the market, the slowness and everything. At -$7, -10, and that's where I should have stopped. I knew I should have stopped at the time. And that's fine. I didn't keep trading because I was revenge trading or I was upset or anything. I just had I had a different, like a strategy that I wanted to test out, and it didn't work out for me. Didn't work out for me. So we can go over that here in a second, but I wanted to show you this YouTube channel here, Ross Cameron. It's the one I was talking about. This is where I'm getting the strategy from. Now, Ross Cameron here says that he's made $12 million day trading. His story is cool and like tough and one of grit and stuff. He, talks about he tried day trading for a long time and it wasn't working. And like he would skimp on all expenses in his life so he could save up some money to try to day trade. And eventually he got it figured out, apparently, I guess. And he's made $12 million. He's super open on his channel. I would recommend checking it out if you're interested in more details about the strategy I'm trying to go into here. And, eventually I'll get it all covered, but Ross is a pretty good teacher. He seems authentic. He's kind of inspiring me to do this YouTube channel a little bit because he does a daily recap. And as you can see, his video today was a red day. And this morning while I was trading it, I was like, well, every morning, I wonder how Ross is doing, I guess. But when I was trading it, I was like, I bet this is going to be a red day because it was just not very good. Not good. I do hope to like step it up a little bit. I don't know. I made the $5 thing for like 2 or 3 weeks now. Of course, today's $25 negative, so maybe I'm not ready to step it up. But I want to like let the winners run a little bit longer. Let the winners run. So instead of bringing in $5 a day, I can try for 10 or 15, and then I could, get this back in 2 days or whatever, which is fine. But I don't want to go into tomorrow's a holiday, Juneteenth. I don't want to go into Thursday all revved up, ready to go, try to get my $25 back, and then mess up because I'm not focusing correctly, not in the correct mindset. But yeah, I like Ross. Um, you know, I think we can watch a little bit of this. I think that's not like terrible for the YouTube algorithms, but or copyright. Is it copyright?
Introducing
I'm what am I doing? Commentating on
Iron Beam,
this.
a bright
I'm
choice
making
for futures
comments,
trading.
so
Iron Beam is an industry.
I'm changing it enough that hopefully I'm not copyright.
So
Let's
point
see.
where we ran
This is
out of
Ross.
time.
Um, if you pay for like getting in his platform, he does have a nice platform set up for doing this. He's got like a nice scanner set up that I think does like it bings you. It'll give you an audible signal when a stock price is coming up. So when I'm doing it, I'm just trying to like click on these stocks and I go to another website uh, that has a nice scanner and I just click through that one and just try to find one that's getting a setup that I like. But he has a nice setup that he paid money. He started to become successful day trading, and then he had a developer develop this. Um, and Ross here, he's super transparent about his trading too. Here's the scanner. Uh, Trying to make sure you can see my mouse when I'm pointing at stuff. There's the scanner. I don't know. Some of the stuff he likes to look for, the float. The float on a stock is how many shares are outstanding, how many shares are available for trade, a million, 10 million, whatever it is. He likes lower float because that lowers the supply side of trading. The demand side is obviously the buyers. Supply side is the sellers. Also, I guess supply side is the amount of shares out there. So if there's fewer shares out there and the demand comes up because you got news, it's more likely to make a big jump. And so that's what he likes, lower float stocks. But yeah, you can look through his for, he does a good breakdown of what he did today. Exactly. And he does a good job. So, um, let's see. I was trying to see if he went over his analytics a little bit. He's got Like he has a nice platform. Here's how he did today. Let's see. Negative $18. So he was flat, I guess, on the day. He was pretty flat. So good for him. But sometimes at the end of his videos, he'll go over like his metrics. He does it enough that, if you're continually watching him every day, you're like, I don't want to see this again today. But apparently this one he skipped it, which is good sometimes. But he has about a decade's worth. He's been trading, I think, since like 2008 or something. But he's got decades worth of a log built up online on some sort of program where he can import his trading action and how he did for the day into the system, and then it tracks how he does over time. And that's something that would be great to get into the more time you're doing this. He contributes that system to bettering him because he could look at what stock prices he does better at, and what float does he do better at, and what time of day does he do better at, so he thinks he does better in the morning, and that's because market opens there, and that's when all the volatility is. But sometimes, like we saw earlier on one of these stocks here, it had like just in the middle of the day it spiked up. So I don't know, could have caught that. If you have like an audible bell on your computer or a scanner running, you can hear a ding and you're, oh, this thing's getting hot. You can run over and see if you can make some money. Other things that were issues for today is mindset. I've had like a lot of green days here, and you kind of think like this is not really possible. This is not happening. Like, how can I just keep making green days? I don't understand. My whole life I've been taught this is gambling. It's so risky. 1% of people are successful. I don't know what percentage it is. It's low. And that's actually probably accurate. But, like, are those people, are they doing the right things? Are they buckling down? Or do they lose $25, get into a rage, and then lose $500 and then quit? I don't know. So we'll see if we can find out. We're on the journey together here. But yeah, hopefully one day I can trade more than making $9 a day, and then it'll be more interesting to watch, I guess. I don't know. So what did we do right here? This one is the one I trade the most on today, and I traded a lot. Look, it had earnings. And this even tells you we had a surprise beat on earnings. What is this? Surprise on earnings, I guess, would be like their profit. So at the bottom line, earnings was better than expected, but top line revenue, like all your sales, they missed on. So they missed on overall sales, but they beat somewhere in the middle. They optimized. They had good operating expenses. Their margins were good. They did some sort of some funny accounting trick to do this. I don't know. I almost minored in accounting in college, but I'm not that interested in it. Not that interested. But anyway, so it had news, and that's where the excitement's coming from. They must have reported it here in the morning because it came up in the morning. It didn't come up yesterday in aftermarket, unless I'm wrong, which I probably am. I don't know. I think that's morning. Anyway, let's try to zoom in here and we'll go through my thought process here a little bit. See why I lost $25 today. $25 today. And the stocks were just so boring. It was like nothing was happening. It was so slow. Like a Monday, I made $9, almost doubling my daily goal in 15 minutes. I was done. And this one, I was just, what do they call it? A glutton for punishment today on this. But I was playing around trying to see if it would work. If I could get something to work here. So here, as per usual, $3 stock, $3.50 stock. Started at 10 shares, bought at 49, ended at 56. Of course, that's $3.56, but I don't want to say $3 every time. So 49.56, made a couple bucks there. or cents. I don't even know what I made. Doesn't matter. Positive. Building confidence. That was the goal. What did we do here? See, it had this giant run up, and I thought, okay, this thing's looking pretty. And it got up in here. Is this the top here? 423. Is that where I was buying it at? 423. I thought this was a pullback, and I thought, we're going to bounce off this $4 line. This is the psychology, big number there in people's heads when they're trading this $4, that nice round number. I thought that we were going to bounce off of this pullback here, and then it came up here. You can see the candle came up here, the tail came up here, and I thought, okay, we're going to go. So I bought in up here, 10. Okay, that failed. And then it came down here to 4. I was like, okay, we're going to bounce off 4. And something I like to do, try to do, this is what I was playing with today, was like you buy in here, you watch it, and if it goes up, great, you make your money. If it goes down, you dollar cost average it a little bit. And a lot of people, including Ross, would say this is stupid. What Ross does is if a trade's not working out for him, he gets out fast. But in some instances, and I think, it just depends on the price action, what the stock does. It's just going to all depend on what it does. So sometimes I think I can make this work. So you put in 10 here, you put in 10 here at this lower 406 price, and then that makes your total cost, your average cost for them, somewhere in here at 414. And anything over 414, you would be making money. And so see, it come up, and I thought, okay, cool, I'm gonna make some money. Came up, got me about breaking even here with these two trades. I was coming back in here about even, and I don't want to get in and out of a stock if I'm even, because I've noticed if I sell at what should be zero, I lose like $1, 50 cents, $1. And when I'm talking $5, or even if I was scaled up and I had 100 shares instead of 10, I'd be talking whatever ratio we're talking about here in scaling. But I don't want to break even. If I'm taking the risk, I want some of the reward. I would hope. So try not to panic. I'm trying to work on letting the winners run. So if this was going to skyrocket here, that would have been, I was going to be here for it. I'm going to let her run. But no, it comes down here, it breaks down through the $4 barrier, bounces back up, and at this point I probably should have sold. And of course I actually did here, noticing I come down here. I kind of like to watch, try to see if the body of a candle will stay up over the $4 mark. See, this body came down, like it dipped down in here. You can see the tail, but it came back up, and okay, so I was still watching, and the next one comes down here below $4 again, and I sell the 20 shares, so I take a loss there. So that makes me, it's $2 positive. This is a pretty good loss. I went from an average of 414, 412 to I sold here at 391, so it's a pretty good loss. I was down negative $3, $4, or $5, so I'm at my goal in the wrong direction. Okay, so the stock comes back up here to retest the $4 mark, and it fades off, it fails, and I was watching that for that retest. You want to wait and kind of watch those retests. Kind of the strategy would be like, if I was going to short this stock thinking it's going to go down now, it would come down, retest, and as it failed the retest to break through 4 again, it comes down, you would short this stock and just write it down. And see, that would have been the strategy there, is to short it to come down. You can see the MACD is trending down with the yellow line below the signal line. So this is all bearish signals for you. Coming down, so I'm still watching this. These lines up here are moving averages, so one's like a 9 moving average, so it just takes like the stock price for the last 9 candles and plots that on this graph and makes a line out of it over time. This one's 9, this one is whatever they are. I'm not actually exactly sure, but this one's like 20 or 28 or something. So this one's slower than this one. This one will follow the graph closer because it's a 9, and this one's a 28. And it's bullish. It's a bullish signal when you're short SMA, simple moving average, crosses above your long SMA, which is right here. So this is a trigger or indicator that maybe you should buy the stock. But it comes up over, we're way so down under 4. So it comes up, it's going to test 4 again. Testing 4, trading flat, super boring to watch or pay attention to. Comes over here, and why did I buy here? Why did I buy here? I saw it coming down here. I think at the time I was thinking, this thing's been bouncing around 4 for a while, surely. I'm not sure if this was the stock I was thinking about. I'm going to do some live trading on this. Or at least like do the recording while I'm doing it so I can talk through it while I'm doing it. I think that would be interesting. I do a lot of talking when I'm doing that in my head or out loud. The talking helps me. It helps me think. So sometimes I'll have an idea by listening to myself talk as if like somebody else was talking, or I hear it. Hearing it out loud it just hits you different. Hits your mind different. So anyway, why did I buy right here? I don't know. See, this is why we're doing a recap, because I'm trying to get better. But I guess maybe I thought it was oversold. I don't know. But I bought 10. I went little. And then I YOLO'd 50. $50 times $3. 50 stocks times 370. It's like 180 bucks worth of stock there. 180 bucks on the line. But, I saw it coming down. It hit this 370 mark. Let's go back here and see. See 370 here. It bounced off 370 before. That's where it just bounced off. So I thought it was going to come back down. And what I should have done was I should have waited for more of a confirmation that we were going up. But, it's just hard. Here we get a couple green candles, but none of them are over the 370 mark. And then bam! And then you've missed it. You've missed it. And then Ross's strategy would be to watch this come up a couple times, wait for a pullback to buy in at, and then catch the next ride up. And he says, you probably missed the first one because that was on the news. So you catch the second elevator up, and then the third one is going to be kind of riskier. Kind of riskier, he says, because that'll be starting to get overextended and come back down. 370. So I bought here, I YOLO'd here, thinking that, we bounced off 370 here, and then we went up. I'm going to, make my $5. I'm already thinking today sucks. There's no news. I just want to either break even, I want to get to zero, or, make a little money and call it a day. I want to be done. So maybe that was my error there. I did not wait long enough. You can see this indicator. These are lagging indicators, remember. But this is not a setup that I should have took, because this was aiming down. It's hard to tell what the 5 minutes doing, the way I got this chart set up here. But aiming down probably. If you looked at the 5 minute, it was probably aiming down like a long time. Shouldn't have bought there. That was definitely a mistake. Obviously a mistake in hindsight, but definitely a mistake even when at the time I took it. The very second I took it. So, and then this thing just down, 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 down. So I'm holding 60 shares there. And I'm riding down. And let's see, I bought again here. I bought 60 shares here. So when I'm on this matrix things, buying shares, it's set up to, okay, 10's the default. I can change this to a 100 or whatever I want to enter down here. I click in here to set up the limit order and buy 100. Or I can change it and buy a different one. And then I click over here to do the sell. Same thing works for shorting it. Since I don't have a position here, I could short this stock in here, and this orange bar is actually the price that the stock is trading for. The red here is the ask price, which is the price that someone will sell the stock for. And the blue one over here, see the stock's moving right now. It's after hour trading going on. This is the bid price. So this is the price that somebody is willing to pay for the stock. And so people are out here saying, I'll give you $3.90. It's kind of like an auction. I'll give you $3.93 for it. People are over here saying, oh, I'll sell it for $3.96. The less liquid a stock is, the less traded a stock is, the wider this will be. And so you'd have to buy up here, and immediately you could sell it here, but immediately you would be down, and the stock price would actually have to rise to get you up there. What I like to do is if this is bouncing around 390 and I think it's going to go up, but I've seen it kind of like dip, it's bouncing around, dipping in here. I'll put a buy order in here at 388, hope the stock price comes down, picks up my order, and then bounces right up back up. It's kind of what I'm doing. Whether that's a good idea or not, I don't know, because um, it could pick up your order on the way down and uh, and then just plummet on down. So let's see, where were we at? I imagine in here. So here I had 60, and like I was saying in this matrix, this changes. So if I put, it defaults to 10. If I pick up 10 shares here, it'll default to 10 again. But if it's going up and I'm like, okay, I'm going to buy another 10. So I click in here, get another 10. It'll show my position of 20 units there. And then this will default to 20. This will be your position, just in case. I imagine that's for, in case I want to sell out. I can just click on this short, it'll sell, or it'll be sell if you have a position, and it would just sell 20. It'll sell what I have. So it defaults to 20. But the problem with that is if you want to come in here and buy, it'll default to 20. So say I want to buy another 10, it's defaulted to 20. My position right here, I had 60 shares or whatever, it defaults to 60. So I could sell fast, but if I could accidentally buy 60 when I didn't actually want to buy that many again. But anyway, what was going on here? I was watching. Here we broke down below 330. This stock was just taking a tumble. And so where was I at? I think am I holding the bag here somewhere? Bought here. So I got 60 shares. I'm holding this bag, hoping it goes back up. And obviously I shouldn't have bought there. And then it comes down here, bounces off of this 330 mark, and I think that this also is something. I think 330 is also something. And by something, I mean back here earlier in the day, it's nothing really, I guess. In the day, I thought there was some support here or something. Something had happened back here. This candle kind of touched off of it. This candle touched off of 330-ish and then went back up. But that's nothing. That's garbage. So, oh, you know what? Let's see. Yeah, I don't know. Another bad decision there. And I wasn't upset. I wasn't in a terrible mood. I was critically thinking about this and just making a poor decision, I guess. So, and I was, down $10 or whatever I am now here at this point, hoping to just break even on the day, I guess. So that was probably my problem. For whatever reason, I guess I saw it come down here, come up. I thought maybe it'd go up again. I bought 40 shares here, and then it did this bounce. It was bouncing here. I was like, oh no, three. It's not going to break 335. And obviously, red body candles. Red body candles are where the stock price starts higher on the body here. The body is the open. The body is the open and the close. So it opened up here and it came down and ended right here. And that's why it's a red body candle. This is a green body candle because it opened down here and closed up here. So by the color, you know where it opened and closed. This one opened up here and closed here. And at some point in that time duration, this is the 1 minute chart, each of these candles represents 1 minute in time. Some point in time in that timer, over that time duration, these tails tell you what the price did outside of the open and close. So this one opened here, it could have came up and touched to make this tail, and then came down to here, and then came back up and ended here. Or it could have started here, come down, grab this one, come up, bounce here, and then go. I think the first one was more likely, but that kind of explains the candle a little bit. So I bought here for whatever reason. It was messing around, and I thought, okay, I'm going to get out of it. I probably placed my sell order here, and I sold 100. So I had 60 shares from back here or more. Oh, here was a trade I was missing. I'm sorry. Here's a trade where I thought it was going to bounce off this 335 and go up. But I didn't like what it was doing here. It kept hitting this 340 and was doing funny business, so I sold out. Glad I sold out, but I bought 60, sold 60, and I'm still holding 60 from way up back up here. So I'm holding 60. It looks like, I made a little bit of money there. I dollar cost averaged that down. So by like holding 60 way up here and then coming down here and buying 60, I could have made profit, at the midpoint somewhere in there. I didn't have to come all the way back up to my original. And that's kind of doubling down. Probably, most day traders probably say it's a terrible idea. Definitely a terrible idea in this one because this just was trending down. And I shouldn't have been buying. That was ridiculous. Dumb. But made some money there. When I saw it hit 40, it didn't look like it was going to go over 340. So I sold there. Come down here. I was going to try to do it again. Bought here, sold here, made a little money there. Not much. That was a penny on. See, I even took a loss. I bought 40. So then I would have. Oh, I sold out. That was it. That was the end. That was the end. I sold out. Holding 60. Bought 40 here. Hoping this was going to go up. But I came to the realization at that point in time that like the 5 minute chart was not looking good and the day was crappy and I sold out. And I knew earlier I could have been done a lot earlier. I could have been down $7 to $10 on the day. But I was playing this game where I was like trying to play this dollar cost average because I have won. I have bought in, got screwed, and the stock flushed a long ways down. But you can overextend to the upside. See here, I'm looking at this well they call it relative strength index, and on this index, it's a 0 to 100 chart, and it is just going back and forth, following the stock. But when this line comes down under 30, it said that the stock is oversold. When the line comes up over 70, it said that the stock is overbought. So it can go both ways. So if you can see a stock come way down here, it's oversold. This was under the 30 mark. It obviously did a rebound right here, and I think that contributed to my thought process here. So recording this in real time would be a lot better recap, I think, because then I could go back and watch it again. Instead of trying to recall it here hours later after the fact. The MACD here crossed over, so that was an indicator that we're going back up. I was thinking clearly in here, and I'm not upset about the big loss because I knew I took a risk when I did it. I wanted to just play. I'm dealing with dollars, not even tens of dollars. I'm dealing in dollars, and I'm not dealing in hundreds or thousands of dollars. So now's the time to play or get creative or figure this out. And one of the issues with the YouTube channel is like, you got in the back of your mind that everybody's going to be seeing what you're going to be doing here, and is that embarrassing? Are you in a vulnerable state, showing what you're trying to do here, showing your failures or whatever? It doesn't matter. I kind of feel some of that, but it really doesn't matter. I don't think. Whatever. I'm trying to help other people, or have other people help me. So if some random guy on the internet sees this and looks through here and gives me a comment that helps me out, I'm actually, helping myself here by doing this. Maybe. I don't think I'm hurting anything unless, like I said, on my first episode, if somebody can hack my account here based on what they're seeing here, I don't know. Take my $1,000, then there you go. But you're a big meanie if you do that. So you're the one that's got to live with yourself at night, I guess. But here I closed out, called it a day. I bought 40 there, thought it was going to come up, gave it a last chance. One reason I only gave it a last chance is also because I'm trading on a cash account here in the United States of America. There is some sort of regulation, and I looked up the reason why it's there at some point. Kind of seemed dumb, I think, but I don't remember what it was. But the regulation is if you're going to trade on a margin account, you have to have 25 grand in there, and that's probably to protect people that don't have much money for somehow. Margin accounts are leveraged accounts where the broker here, in this case TradeStation, would give me money, would loan me money to trade. And I think most of them in the United States, you can borrow up to four times what your cash is in the account. And so I could be trading if on a margin account, I could be trading with $4,000 when I only have $1,000. This stuff can be very dangerous, addictive, dangerous. It's kind of like a gambler's high when you're nailing it, you know, and smoking it, hitting the ball out of the park, and you got to be careful. Keep those emotions in check. But anyway, I ran out of buying power. I don't have $25,000 in this account, obviously. So I cannot day trade on a margin account. If you day trade more than like three times in one day, or if you day trade more than three times in over 3 days or over 4 days, they freeze your account. If you're day trading under $25,000, so you can do one or two, and then they freeze your account. And so I have a cash account here, and what that means is every time I buy a stock, if I put $60 into a stock and then I sell that stock, I cannot use that $60 again until tomorrow. It has to settle overnight for me to use it. So every day I have access to pretty much this full amount to trade, but as I trade it, my buying power goes down. Buying power. With cash account, stocks can be bought with your cash available to withdraw. Cash balances in the account, this may be a negative number if you are borrowing funds. Don't do that. Borrow funds, I guess, if you know what you're doing, of course, but don't go negative. Is my advice. Anyway, this is kind of safety network, safety deal here too. Of course, I can't borrow money, and of course, I can't really overtrade or whatever. I hit a literal stopping point here where I couldn't. If I was all emotional or whatever, and I wanted to try to get my $25 back today, it had to be today for whatever reason. Even though the stock market will open again on Thursday, there's another day. Yeah, I mean that's just the way people get all emotional, riled up, and you blow an account like that, lose $700 in a day, and there's no way I'm going to dig myself out of that hole. Have $300 in here and try to come back up to 1,000? No way. So slow and steady wins the race, I think. But anyway, yep. So I gave up. I ran out of buying power. The 5-minute chart looked terrible. This thing was bouncing, bouncing, bouncing here off of this 335 again. I'm like, it's just going to keep going down. I got to get out. I got to call it. A problem with day trading, or a thought process that traders have that's a problem, is you don't actually have a loss until you sell the trade, until you sell for a loss. So as long as you stay in the trade, you have that potential to come back up, and it's of course annoying a lot because sometimes Ross Cameron gets out of the trade really fast, and then a few minutes later it pops back up here to where you would have been in the green, and you bit the bullet and took a loss back here, and then you were afraid to get back in because you just got a loss, and it's frustrating, just frustrating. But yeah, I was out about buying power, saw everything was not going to go up anymore. And so I sold out. I sold the 100 shares I had there. I made a penny on those 40 shares, so that's cool. But finished the day down $25. I'm still up. And that's another thing that goes to mindset is I put $1,050 into this account. Why that number? I don't know. I put 50 into the account just to get it open, and then while I was moving the next money, I moved a nice round thousand. So that's what it was. So on my investment, I'm still up. Is it worth the time? No. I've made it's like an entrepreneurship, I guess, trying to build a business. You put in all those hours in the beginning and hope it pays off in the future. But I'm up $20 here. So that's why I wasn't super worried about the $25. I wouldn't have been worried if I dropped down either. I didn't blow up the account or anything. We survived to fight another day. And yeah, had to sell out there. So what happened to the stock the rest of the day, though? Um, It's going to load correctly. Okay, there we go. So my final trades were here. Had I held all the way to here, I would have done fine. And it actually, right in here, I was like, oh, this thing's probably got to come back up to 4. I think it's oversold right in here. You know, I think that was my thought process. And I was like, well, it's been bouncing around. It came way up here to 440. It comes down here. It bounces back up here. I guess it was kind of bouncing. Maybe the middle is 380. So I thought it was oversold down in here. I bought in, and it just took me for a ride down here. Had I held my 100 stocks all day, and thinking about it right now, I probably maybe could have. I probably maybe could have because I knew the stocks were pretty flat. I wasn't worried about really this thing tanking. These don't come up and then go back down to 0. But this stock started yesterday at 212, so closed today at 4. So doubled the value of the company today on that. But obviously, I could have made money had I just held it. Maybe it would have been smart. I don't. If somebody thinks that would have been smart, please let me know. Because it was already down. And if you're sitting here watching this through the day and then you saw this happen, you got to ride it through that dip, and without being able to see the future, you're just like, where is this going? You don't know. But wish I could have held it up to here, but that's not the way it worked out. So I've been green most days, which is cool. Confidence builder. Hopefully, it sucks that the market's kind of closed tomorrow because now I gotta wait till Thursday to have another swing at the plate there. But I'm not going to come into Thursday thinking I have to redeem myself or anything. I'm going to keep it cool. Hopefully, I have a green day on Thursday, green or flat. And that's the dream. It's just living the dream over here, staying positive, living the dream, and I'm up $20, so can't complain. Cannot complain. You can see what the SPY do. The SPY is the S&P 500, and you can see here it's just chop today, just chop. You could make a lot of money here if you were reading those, and I'm sure a lot of people did make a lot of money today. People who know what they're doing. Buy here, sell here, buy here, sell here. And when I say sell, I mean like don't just sell your stocks, short this. Come in here, you see all the indicators. Everything's telling you, you're reading the price action, everything's telling you this is going to go down for a while. So you can make money on your way down too if you're good. I've seen an argument where they don't do that because, especially for new traders, because you want to focus, you want to get really good at your strategy. And if that has a bullish, a positive bias to it, then just focus there until you can get better. You can't short stocks unless you're on a margin account because shorting stocks is essentially borrowing them. You sell a stock here, and then to close your short and to make money, you hopefully buy the stock back down here, and you pay this one back. You pay these shares back with a much cheaper share, and you get to keep the net there. And that's how you make money when the stock price is going down. But you have to borrow them. You have to borrow because you don't own them. You own them maybe over here. You sold for a profit, and now you own 0 stocks, but you think it's going to go down, so you want to sell. You want to sell here and then buy at a lower price. So that's how you make money when it goes down. For those of you that don't know, this is all very, pretty basic stuff, new stuff. I'm trying to go over it a little bit here for anybody that's interested, but as time goes on, maybe I won't rant on about this stuff so much. But yeah, Jared's gone. No editing today. This is going to be whatever I've been on here, longer thing. And I was unleashed on the world. No editor Jared to keep me where I'm supposed to be here. So, but that was SPY. NVDA is awesome. I really like NVDA. It's up 3,000% over the last 2 or 3 years. It had this earnings call here, and NVIDIA just did a 10-for-1 stock split where every stock gets divided 10 times, so the price is 1/10, but there's 10 times as many stocks out there. So the value is exactly the same, but it makes the stock price cheaper. So instead of being 1,300, and $11 here. The stock price is $131.14. So people like me, can trade it easier. And maybe there's a psychological thing to that. Like if you see a stock, obviously the Oracle of Omaha, Warren Buffett doesn't believe in that for his Class A shares because he's never done a stock split, and his stocks are like $84,000 per share, one share. And so that's one approach. He says it doesn't matter. Now, the only person that can afford to buy a share is somebody that has a lot of money. But NVIDIA is way up. All the talking heads say, oh, we're overextended. What's this going to do? It's the dot-com bubble again on this AI hype. And maybe that's true. That could very well be true. Nobody knows the future. No crystal ball over here. These are dividend payments. NVIDIA is a growth company, so it's not even making a dividend, or it's not very much. It's a penny now. But I don't know. As far as I can tell, NVIDIA's GPU chips are going to remain in super high demand going into the future. AI does not seem to be slowing down. Some people say we're hitting a wall with the intelligence that we can get to without any breakdowns, but other people argue the opposite. And whether or not we do actually hit a wall here where we need a breakthrough and we just can't figure it out to make these chat GPTs, the llamas, the Claudes, the Google Geminis smarter, even if we hit a wall, there's still like a decade of just people trying to figure out what to do with these things. And, figuring out use cases and apps and tools they can build. Robotics is coming along. Tesla and a number of companies are getting real close to humanoid robotics that seem pretty functional. They seem like they could do your laundry almost. They seem like they can work in a factory almost. And those things, the brain in those things are LLMs, I think. They're some sort of neural network, artificial intelligence. And those things need to compute to do their thing. They need to think. They need to spend energy on computing, and they compute on chips, GPU chips, graphic processing units or something. They compute on those chips that are sold by NVIDIA, and NVIDIA seems to have some sort of market monopoly here. NVIDIA made GPUs. Sorry, my brain's fried. Made them forever for gaming. They go into they're for graphic cards. I think I'm not a computer science major or anything. Never been interested in coding or anything. Don't care about that stuff. But I am interested in what AI can do, and I think that's cool. And NVIDIA has some sort of monopoly on this market, and everybody needs their chips. Google, Microsoft, OpenAI, the government, every government in the world is probably working on their own AIs right now, and they need NVIDIA's chips. And talk about dot-com bubble. People in 2000 in the dot-com bubble were buying, everything, every stock that had a new website was getting bought up, and even companies that had no money, they were making negative money, and they were getting bought up. That was all hype and emotion. But NVIDIA here, let's see, beat, surprise. It beat by 29%. Is that what it means? Earnings? It beat by 29%. On revenue, top line revenue, it beat by 20%. And this is the August 23, year 23 report. Next one, beat by 20%, beat by 12%. Next one, beat by 11%, by 7%. So these are definitely slowing down their beats, but the beat is lower possibly because the expectations are getting higher. The bar is going up. So this is 11 and 7, and then the most recent one here before the stock split. See, it gapped up. It was so good of earnings report that it gaps up, and these gaps are what the stock did overnight when the market's not open. It was trading down in here. It was under $1,000, and I was watching this news when it happened. The next morning, it opened at, I don't know if I can tell, kind of. Oh, I don't know. It opened at like $1,100, $1,060 or something. So it gapped up $100 overnight on this here, and obviously it went down again on the percentages here, but it still beat. And I think that these estimates were getting higher and higher because the hype was just like, well, it's like, well, we missed by 20% back here. We better raise our estimates. Oh, darn, we missed by 11% here. We better, raise up our estimates of what's going to happen here. And maybe it's going to keep going up. I don't know. Maybe I'm missing the ball here, and the slowdown in the percentage it's beating by is gonna go negative here on the next earnings. What's going on with NVIDIA now? They have had the Hopper GPU line out for a while, I think, and they are coming out with their Blackwell, the next generation of GPUs, which are like 14 times more efficient than their last generation. So like 14, it might be percent. I'm sorry, it might be a percent. It's like it does something like 14 times more computations for less energy. It takes less energy to run it, and it does more computations. So they're making better products. And if you don't think when those start rolling off the assembly line here in quarter three or quarter four of the year here, that those are not just going to be like, they are going to be bought up as fast as they can make them, just as fast as they can make them, I think. Is, as long as no World War III breaks out here, something goofy doesn't happen with the election, there's a lot of variables, but as far as I can tell, NVIDIA is doing fine. Doing fine, even at these ridiculous evaluation, and it's just just happened to be the position they were in when this breakthrough on GPU AI training type of technology came in, and they were just in the right spot at the right time. But are they overvalued? Are they over now? I don't know. I'm not sure. But there's a lot of content out there on YouTube about this if you want to look more into it, and you could definitely find people arguing both ways. So yeah, I definitely went a little over on my time here, so we'll call that a day. Happy Tuesday, everyone. Hope everybody has a good Juneteenth. Enjoy a day off if you get it. I got to work tomorrow, but there you go. All right, take care.